Well, let's move on to our next corporate, JB Chemicals. Well, that's JB Pharma. That's a stock on our radar. It's up more than 40% in this year. The company's Q1 performance as well was fairly good. To discuss how things are shaping up, Mr. Nikhil Chopra, the CEO and whole-time director of JB Pharma, joins us on the show. Hi, Mr. Chopra. Good morning. Thanks so much for joining in. Well, I want to talk about a lot of aspects and how business is shaping up. But first, on the promoter entity, KKR, well, they have close to 54% stake in the company. They bought that 54% stake for around 3,100 crores. But you all have done very, very well. And now that stake is valued at close to around 12,000 crores. What's the plan out there?
So, Nigel, first of all, good morning and thank you for inviting me on the show. I think we are running a steady ship and being now in top 25 and the fastest growing company in Indian pharma market, and touch wood, our international business is also doing well. I think at mid-teen that we are able to grow, and we are able to grow. EBITDA growth is around 18 to 20%. I think KKR is here to continue and look at what more we can do with this asset and serve more and more number of patients with quality medicines coming from the house of JB. That is what I can say at this moment of time.
Yes, they've already tripled their investment, so that's why there would be some kind of inclination, right? Take some money off the table, going by the kind of deals and the kind of appetite that we have seen.
See, I can't comment, Niger, on this. Conceptually, we have a stable management team working at JB, and there are people from across sectors who have joined in the senior management team. And we continue to invest in the business. We continue to look at what more we can do wherever we are present within India or within international markets. That is what we are aiming at. Recently, also we got one of our product approved in US FDA. So that is doxepin. And we have been filing 3 to 4 ANDAs every year in US. We've been filing 8 to 10 products in our ROW market. Last couple of years, we invested close to $200 million in acquisitions, and touch wood, all our acquisitions are fairly doing well. So we are here to stay.
Okay. I wanted to understand a little more about what the revenue potential is, because it was a very strong Q1 that you clocked in, right? You saw a domestic growth of almost 17%. And even in the chronic segment, you had mid-teens growth. So I want to understand what is the volume and pricing tracking at right now as we speak in the domestic market, and what is the exit rate for FY24?
Hello, Sonia. And if you look at MAT, August 2023, JB Chemical continues to grow at around 20%, which is a mix of volume, price, and overall new products introduced. And market is growing at around 10%. Volume growth for us is high single digit, close to around 8-9%, as compared to market volume growth, which is 1 to 2%. And price growth is around 6 to 7%. And new introductions are contributing around 3 to 4% to this growth. We could shy away touching 900 crores for Q1, which we grew at around 17%. And our EBITDA margins were healthy, which were 27% in echo to the guidance that we've been giving, 25 to 27%. We should be ranging plus minus close to 875 to 900 crores every quarter. That is what we are aiming. You should see this probably happening in Q2, Q3. Our chronic contribution overall has improved, and we are now the fastest growing company in cardiology market in the country. In 2020, when with our organic brands Cilacar and Nicardia, we were 13th ranked company, and today we are 8th ranked company with the acquisitions that we did with heart failure pill, with rosuvastatin, Razel brand from Glenmark. So we are the 8th ranked company, and our aspiration is to be in top 5 in cardiology market in the country. That is where we stand from overall guidance and overall our presence in chronic therapies in the country.
Nikhil, just to get the numbers right, the domestic revenue growth in the month of August was 20%, right?
No, don't market. I'm talking of MAT 2023 August. His growth is 20%. For the month of August, we grew at around 7% as compared to market growth of 4%, 4 to 5%.
Okay. But isn't that much slower than what we've seen in Q1? Because in Q1, your domestic revenue growth was 17%. So August has come down to 7%.
So it may be because of the higher base last year, but our chronic chronic growth continues to be in double digit, and acute it is more Reema from a season perspective. And this year it is good for the Indian consumers that they did not suffer from many of the GI infections. So it is good for the population.
All right. Mr. Chopra, your margin band has been 25 to 27%. Now, your cardiac brand, Azmarda, that as well, has helped in the first quarter as well and likely to help from here. Input costs have cooled off. Freight costs as well are lower. Do you think you can hit the upper end of the band? Should we be working with 27% given all the ingredients?
Niger, we could deliver the upper side of the brand for Q1. Now, if you look at the freight cost, overall has come down in a big way as compared to last year. The RMPM costs have peaked, but they have not declined. They are stable. So if we see next 3 to 6 months, if RMPM cost probably comes down, then you can assume in terms of the high peak EBITDA margin, that is what we have, the guidance that we have been giving.
Okay. Can you tell us if there are, in the near future, what would the acquisitions look like? Any target number that you have? How many acquisitions are you planning to do in the next 12 to 18 months? And the recently acquired portfolios as well, any indication of how they've performed?
Yeah. So let me first talk about the recently acquired portfolio. Let me talk about what we acquired from Glenmark. The entire rosuvastatin portfolio, which we bought at, we bought around 55 to 60 crore revenue at around 300 crores with healthy gross margins. The secondary demand, which was there every month, was close to 4.5 crores. And we were 10th ranked brand in the overall rosuvastatin franchisee. In last 6 to 8 months, our secondary demand from 4.5 crores has gone up to 5.5 crores. And now we have climbed from 10th to 8th rank. So there's a good traction, and overall this franchisee for erstwhile company Glenmark was not growing for last 3-4 years. We aim to grow this franchisee at around 12 to 14%. On Sonia, on the acquisition front, from a guidance perspective, we continue to evaluate assets. We continue to look at if there are assets available which are quality, progressive, may not be growing but are in a progressive category of growth. And if we can turn around with our capability, surely we would like to acquire. And equally, we also look at another angle from a perspective of improvement in gross margin. That is what we could do for Asmada. That is where we stand. So either a growth trajectory or a gross margin improvement trajectory. Those are two things. Third is the payback period that we commit when we get any acquisitions, when we get the approval from the board, is around 6 to 7 years. That is what we want to do. That is where we stand. And lastly, maximum what we can leverage is 1.5 times of our EBITDA value, where we stand from the value of acquisition that we intend to do. But nothing that I would like to say that which is immediately on the horizon. But this is what parameters we keep in mind, and there is no pressure on us to do any acquisition. Last couple of years, we invested close to $200 billion. We may not do anything. We may acquire depending upon what is available, and if we think that we can turn it around.
Just very quickly, Nikhil, do you think you will be cash positive by the end of FY24? Because you have been bringing down your debt.
Yes, we'll be cash positive. Yeah.
Okay. All right, we'll leave it at that. Thanks a lot for joining in, and all the best with the business. That's JB Chemicals.